A very good afternoon to you. Let's get on to the markets. Asian markets rally today. This as tensions over trade ease slightly following President Donald Trump announcing that electronics such as computer chips, smartphones and laptops would not be subject to the same high import duties as some other products coming from China. However, a weaker US dollar and lower oil prices hinted at persisting worries over the direction of Trump's trade war. The Nikkei share average rose by 1.2%. The Hang Seng Index jumped by 2.4%, while the Shanghai Composite Index ended the session up 0.76%. US markets ended the session on a positive note on Friday. This as major banks kicked off the first quarter earnings season. All three major indexes ended the session sharply higher after assurances from Boston Federal Reserve President Susan Collins that the Fed was prepared to keep financial markets functioning should the need arise. The Dow Jones Industrial Average ended the session up 1.56%. The S&P 500 rose by 1.81%, while the Nasdaq Composite Index jumped by 2.06%. All right, looking at our local indicators, the all-share index currently trading in positive territory, 1.8% higher at 88,026 index points. The rand is firming, trading at 18.92 against the US dollar, 21.54 vis-a-vis the euro, and 24.97 against the British pound. In terms of commodities, we see that gold is trading at $3,211 an ounce, platinum at $955 an ounce, while Brent crude oil is trading at $65.33 a barrel. All right, let's get back into our conversation now with portfolio manager at Rand Swiss, Gary Boyson. Thanks very much, Gary, for joining us. So what's the latest information on the trade war situation as you understand it? Do you think Donald Trump's concessions around electronics will help to alleviate costs for consumers? And isn't it interesting that he's given concessions in that regard for companies like Apple and the like, who could probably have the resources to build in America, but not for small businesses that won't be able to really manage the kind of tariffs that they're going to have to pay at the border?
So it's a good question, and there's a lot to it. So if you look at, the idea that Apple can manufacture in the US and they have deep pockets and they can, that is true in the long term, but in the short term, that's incredibly difficult to implement. If you look at comments, going all the way back to Steve Jobs, Tim Cook has also chatted about it as well. It's, the idea that China is just this pool of low-cost labor is probably incorrect. There's enormous skills that have been developed over time through the way that they create factories, through the skills and development programs of their people that make them almost uniquely positioned in terms of, high-quality manufacturing. So if you had to try and get a room of tooling engineers, for example, in the US, you would struggle to fill it. But in China, you have football stadiums full of tooling engineers that can build the likes of Apple's products. So it is also a skills deficit that takes a long time to train out. So this is not something that's short term. So in terms of the exemptions that we've seen from the White House recently, absolutely. I think this is almost a knee-jerk reaction, trying to stabilize markets. We could see how fast everything was coming apart last week. And, I think the view, certainly of the Trump White House, is still that they need to suppress China. They need to move manufacturing back to the US. And that hasn't changed. So while we have a pause at the moment and we have some exemptions on, as you say, consumer electronics, a couple of things, there's expected to be further announcements around semiconductors this week, for example, and what tariffs will be placed there as they investigate the semiconductor supply chain. And I think from a market perspective and certainly from an analyst perspective, the world, the tariffs are not over. And just because we're getting a little bit of relief and it looks like we've seen them roll back slightly, 10% blanket tariff, reciprocal tariff is still very high. It's still a shock to the global economy. Banks like JP Morgan, for example, are giving around a 60% chance that the US will go into recession purely because of these tariffs. So while we have seen some easing, and I think the kind of initial panic from last week has subsided, we are certainly not out of the woods yet.
Yeah. Do you think, as he did with the reciprocal tariffs more broadly, do you think that Donald Trump is going to have to backtrack somewhat in terms of his approach with China? Because China is not, making any calls to the United States to do a deal. they're just staying mum and it's business as usual, even though they're going to be hurt as well, because ultimately it's the US consumer that's going to have to pay that higher tariff.
Absolutely, and I think that's really where the sticking point is, because in the short term, the US can tolerate this, but I don't think the US electorate will tolerate this in the long term. And the mechanism which the US economy or the US political system and the Chinese political system work are very different. And Trump will face, at least certainly for the Republican Party, will face enormous pressure should we see significant escalation in inflation, which most economists are forecasting. I think the counterbalance to this is, for me, the White House almost revealed its hand, in the rolling back of the tariffs. We saw, a pause placed on the EU, which was preparing for retaliatory tariffs. We saw a pause on Canada as well, but obviously, the vast increase on tariffs to China, was not unwound, other than these select sectors, which will essentially benefit the US economy. And for me, it really highlights that this is a battle between the US and China, and it really is the US looking at the development that's happened in China in terms of things like DeepSeek and the AI technology. And this is a concerted effort to try and repress Chinese development and leave the US on top. Previously, the US, we understand that the US is very multilateral agreements like the World Trade Organization, looking at something like BRICS, for example. And what they're trying to do is negotiate bilateral agreements with so many different countries. I think it's up to 90 at this stage in 90 days. Now that's a huge operational task, but you can understand why they're trying to do it. They're trying to use the US economic power to essentially, if you want to say bully each country one-on-one and kind of try and get those concessions while at the same time trying to I suppose, suppress trade between the US and China, to try and maintain US global dominance.
Yeah.
So it's a fascinating picture that we're seeing unfolding at the moment.
Yeah, the picture that you paint right now sounds impossible. It almost sounds like one country a day, 90 countries, 90 days. It seems impossible. But very quickly, just give us your thoughts on what's happening with the local currency. It seems to have made some gains. Is that to do with the announcement that we've heard that the finance minister is likely to trace back on his VAT plans? What are your thoughts?
Yeah, so I think clearly the success of the GNU has become very correlated to the rand, and we can see that any hope that we have of the GNU holding together does improve the local currency. So while it does look like the 0.5% VAT increase is now seriously in question, as many political parties won't support it. Also, just news that the ANC and DA had I suppose, fruitful negotiations over the weekend and last week has really, I suppose, gained a little bit of optimism that the GNU will hold together, and we can see the currency strengthening on the back of that. So if I look at the rand-dollar exchange rate around 18.90 at the moment, that's a huge move stronger from around that 19.50 level. Some of that is coming from a resurgence in the dollar. So we've still got the dollar index very weak, still below 100, but it is a little bit stronger. So it's... and just that kind of persistent weakness. If I look at the rand against the pound, for example, we've actually still weakening against the pound, but we are gaining ground against the euro as well. So I think most of the story is probably optimism around local factors, but of course the international factors are always at play as well.
Indeed. Gary, thank you very much. Always a pleasure to chat to you. That was Gary Boyson. He's a portfolio manager at RandSwiss.